Robert, great to have you on the show.
Glad to be here. Thank you for inviting us.
So housing's been hot. We know this. It's been hot, hot, hot. And, of course, that played out with Compass as well. Strong revenue growth, 73% in 2021. Transaction volumes up 56% as well. Can you continue to grow at that pace as we see interest rates rise and inventory shortages continue to persist?
Yeah, like you mentioned, our transactions were up. It was actually, we grew our transactions 7 times faster than the market, and our market share grew 40% last year. So we're really a share gainer in the industry, and we expect we'll continue to be so, particularly because we drive agent success. The focus of Compass is to help agents be more successful, and our agents are growing their transactions 3 times faster than the market, which means they come here at a faster rate to grow, and they stay here when we have agent retention above 90%.
So how quickly can you expand? Where are you expanding to strategically in 2022?
And so last year we expanded to 25 markets, and this year we're going to moderate the expansion. We focused our expansion on the markets where we saw people moving from and to, so we can cover the full base of where our agents' clients were moving to. I'll think about almost the airplane traffic of people moving. The key areas we expand to were in Hawaii, more the middle market in the country, and all throughout Florida. Florida is the hottest market in the country right now.
So we've got higher rates on the horizon this year with the Fed tightening. We also know that inventory is very scarce. There's an expectation that it could potentially get more scarce as you do get those higher rates from an affordability standpoint. How are you assessing that? What do you expect to see in terms of that playing out in the housing market this year?
Yeah, look, inflation is significant. As Jim Cramer said yesterday, it's almost so hot that you can't see it going higher. But remember, real estate is a good hedge to inflation, and we focus more on the high end of the market. So our average price point is above $1 million, which is less sensitive to rates because in the higher end, they don't use mortgages as much. We do see the market growing 11% this year. That's not in our guidance. We have a haircut to that in our guidance. But even in February, prices are up 3% month over month. And so we see the momentum of last year where prices were up 19% over the course of the year, continuing into 2020. There's just so much demand, multiple offers in all of our markets, and such low inventory. We just see this price momentum continuing.
Do you expect to see international buyers come back in a more meaningful way this year?
Yeah, and until last fall, there were 33 major countries that were not allowed to come to the United States. They were invited back in November. And we see, particularly in places like New York, Miami, all throughout Florida, Los Angeles, the Bay Area, Seattle, we see that demand picking up in actual buyer activity. Suburbs
or cities? Do we still see people move into the burbs?
We still see people moving to the burbs, but there's not. We need more inventory to meet that demand. Now, this is a great time if you are a seller. And you look to your left and your right, and you see your neighbors selling homes at unprecedented prices. This is the great time to consider selling your home.
Do you just scratch your head a little bit, given the fact that housing's been hot, you've been growing, you posted such strong numbers? I mean, stock's up today, but the fact that since you've gone public, you are down more than 50% from those highs early last year. What do you make of that?
Yeah, look, last year, as you know well, the IPO market really struggled. The majority of IPOs from last year are down below their offering price this year. On top of that, real estate's been hit really hard. Investors are scared about the rates increasing, and my personal view is that they are overreacting. I think we'll see that play out over the course of this spring because our belief again is that the market will grow in 2022. But that is, I think there's more fear in the market about the impact of rates relative to the reality. The demand is so hot with multiple offers again in all of our markets that it's not a rate story. It's really just an inventory story. Will the inventory come online? And we have a lot of leading indicators on the market.
Yeah.
And we're seeing that owners are looking again to their neighbors and saying, well, they got an incredible price and the stock market's not doing as well. This is a great time to sell.